start recording. Okay. So what I wanted to say before, just before I just switched the computer switched off, I want just to highlight that if you have any questions at any time of the presentation, please feel free to interrupt and just ask the question, because this is why we are here, just trying to do this as much workshop style as possible. I will also try to refer to the chat version. So if you want to write the questions, I also have. We'll just try to make sure that I can answer them. So I just a few words about myself, and then right now I'm just joined last year Meta Ventures, one of the leading European early stage investors. We are active in Poland, where I am situated, but also we are acting from Slovenia, from Italy, where our headquarters is. We have offices in Brussels, and we are thinking about more offices in Central Eastern Europe in a close future. But then what we do is we specifically invest mostly in our preferred version as a co-investment fund with private investors to support the startups from different sectors, as we are mostly sector agnostic at a stage, and we're just trying to go further and further. Okay, so just not going to make any more hesitation and delays, let me go to the presentations. So what's the due diligence? In fact, what we are just talking about, the due diligence. So first of all, as I wanted to say, I would just like to put the place of due deal on the investment process, because investment process is a third moment from where I just got the in terms of from venture capital side, is the moment I got the presentation from your pitch deck or whatever. I will just talk about slightly more. Then is my task to make a business evaluation. You do the legal stuff, legal due diligence, which I also will cover mostly, and then finally, I don't know, just jumping on, and then finally go for the negotiations and what we call a deal done at the structure. Honestly, with the process which we can see here, starting from 100 deals that we got and go to for the first screening, we do like 3 to 5 deals at the deal done level, and most of them are just abandoned during the due diligence, or we just find something that we don't like, or we just find stuff that we have not expected to be in the company at the level. So this is why it's important to do due diligence for us. We want to know who we are acting with, what we are about to invest in, and what are the legal structures behind this. And we just need to thoroughly check this and find the way to make the best, to choose the best of the best. And as you can see, for me, investment process is a very selective stuff. As you can see, from 100 to 3% hit rate, which is pretty high on a venture level, is very selective. It is lasting. What I mean by this is that you cannot expect us to be in a rush, meaning we do not do deals within 2-week times. Usually it's about 3 months of a period from the first meeting to the time we just say yes, and we go further on. It's also demanding. It's demanding in stages that it's time demanding. It's demanding a lot of effort from both sides. We expect you to add a few aspects to your business plans, to your teasers, to work your business proposal again and again with us. And it's also demanding on us, because we also spend much time with you working and getting to know each other. And then spending so much time together, working together, it happens to be conflictual, because the conflicts happen. Yeah? We have different aspects, but this is the moment I always say that we should remember that you do not sell your business to us. We just invite us to be a partner. In fact, one of my colleagues from the venture side describes the investment process as the process of taking a marriage. And the due diligence is a moment that we do, which we get first know each other, and then we're just trying to build the relationship, build the trust, understand each other, and finally and happily get married, meaning this time to do the investment. And then, of course, comes the second part of the equation, which means this marriage, this investment, is the difference is in the timing, because in a marriage you usually say it's forever, and we are just trying to say we are going to divorce within the next 5 years without blaming each other, just taking our money, each one's taking money and leaving out. So this is basically the idea that we as the fund have, and how do we see the due diligence process at the current stage. So to be a little bit more at the definition side, what I can say about due diligence, that this is the evaluation of a potential target company, meaning from the venture capital side of any investor side. And the reason we do it is just to determine whether or not our fund will invest in the business. And this is basically what we just want to do during this due diligence. We are just considering whether the business proposal, the team behind this, is the real stuff we want to invest in. So then how we just split on the due diligence. As I mentioned on the investment process, we have 3 stages. This is a screening, the first screening and second screening due diligence. We have a business due diligence, which is a deep dive aspects from us. And then finally comes the legal due diligence, which usually is done by our partners, attorneys, that they have the ways to check what they need to approve the investment step. So screening due diligence, basically I call it a speed dating. We just have so many deals coming to us about for each of our funds is about 150 a year or plus 150 a year. So we do not have much time to meet with anybody really. So the first screening, what we're just trying to do is just go and check the strategy fit, whether the company is in the stage we want to invest. And this is somehow you also need to check, because there are funds that are just trying to be more on the early stage, more on the seed stage, or more on the growth stage, and you have to find the way. We also check the size, whether the size is the size of investment is in our side. We have a fund that invests at 250 euro. We have a fund that invests 2.5 million euro. And if you just miss the fund and then go to the smaller fund to raise 1 million, you're out of the strategy misfit. Then also industry or sector we can discuss. This is important if you are not sector agnostic. You have to think about looking for investors from the whether they're doing deals in your sector, your industry you are. We are at the Meta we are mostly sector agnostic, so it's not a problem with us. But sometimes it's good to check what deals are preferred to be done. And finally, it's just the first screen of the potential. We want to see whether the business, whether the project you come is a real business-wise, whether we have the real potential to build business, to grow the business, and finally, what we really want as the capitalists to exit the business with the given IRRs or given returns. Then the question is how we judge this. Well, the screening is basically usually done on the pitch decks. A pitch deck we receive from the given projects or a teaser. And this is mostly the documents that you send to us by emails, and we just read them through, and having any questions, we either ask them by mails or we just trying to do an interview to find out whether it's done or it's preferred or not. And this is something we spend a lot of time in terms of number of companies that come, but from the company side, it's obviously not so intensive, because it's more to be decided on our side what we can do, what we should do, and how we will work it through. And then it starts with the business due diligence, which is what I call a deep dive. Which is the moment that we really build the relationship with each other, trying to know each other very well. We also expect that you will ask questions about ourselves. We will come to this at the end of the presentation. But this is something that we really need to remember. We really need to focus on, and this is somehow, I would say, the very basic of the due diligence process that the venture capital, the venture capital, as we do. So what we check in the terms of business due diligence, where we got to check a team, so who is involved in the team. We're gonna to check how the business model works, how the market does, whether the product and technology is innovative or not, and the financial stuff like needs and exit aspects. I will go through this more in details in a second, so I will just not spend much time right now. And then how we work on this. This is definitely, we want to have something more than a pitch deck, preferably a short and a brief business plan. But then we work a lot of together. We have a number of meetings, Q&A sessions with us. We invite our experts to judge the project, to say what they think about your attitude, your perspective. We ask about the references from your side, just to check whether about on your side. And we also start doing here market and so-called desk research to find whether this what you are telling is really available at the market side. So this is a lot of work, and this is particular time that we spend most of this 3 months time we spend on this due diligence stuff. And in fact, in my opinion, what's the effect of the business due diligence is just kind of an engagement. Yes, this is the moment that we say, okay, we can agree on a marriage. Yes, so let's agree that I would like to invest in you and you want our investment. So let's agree, and we signed the document that is called a term sheet. A term sheet is it's description of the basic conditions and terms of the final investment agreement. So this will be done in this format. And of course, we will also do at this stage investment recommendation. So we just prepare for our internal investment committee why we, as a management of the fund, we want to invest in you, why we just want to say yes, and why we propose to you at these terms. So they need to agree. But as I mentioned, the final step of due diligence is the legal due diligence. And this is the moment that, in fact, you meet your mother-in-law. Because here comes the attorneys, and they just start discussions about what they want to see, and they just make checks about the business. They want to see your previous shareholder agreements, the key contracts that you have, personal issues, if you have any, whether you pay taxes or not, or whether you just don't have any delays with it. What are your key assets? Maybe you have taken some loans on bonds. There's a long list of the aspects that usually is asked. Obviously, we at our funds will very carefully check IP aspects. Maybe you have some patents done or not. So definitely this is stuff that we want to, and we need to check that the certification or licenses you need to bear in mind. And hopefully not, but sometimes it happens if you have any lawsuits already issued on your side, if you have some problems on legal. So we basically, the legal due diligence is the moment that we say to yes, we agree on the terms, and right now let's check on the hard basis. Let's meet our mothers-in-laws. Let's do the attorneys do the work. They send you the list of, let's say, 20-page list of reps and warranties. So you declare about the situation of the company, and they check how does it work, whether it's true, whether it's well done, or we have some problems, and we have to. And very frequently, we find some problems in the companies, especially as startups that have not been created from the very initial phase to be fully agreed upon the legal aspects, and we just try to cope with this repair to make these companies investable again. So then there's the issue how we work on this. We usually, the investors usually, the attorneys usually ask for some data room. They want to see your registered papers. They want you to scan the contracts you have signed, especially with the key customers or key suppliers or key employees. We want to check whether you have the proper NDA signed within the company. And obviously we ask a lot of questions about the stuff, and finally make the report and decide whether it's going to be done on the preferential side, whether we have agreed this is what you have presented before is true and we can invest, or we have some troubles with this and we have to cope finally. So basically, this is in a short manner description of the due diligence, being a screening, business evaluation, and the legal due diligence. So this is the moment I would make a short pause and ask whether you have any questions at this stage. Okay, so I assume that there is no questions so far. Hopefully, it's not because just trying to be very. The problem is the problem I have always with no question is whether it's self-explanatory what I say, or it's absolutely not understandable. And the question is whether you understand this what I'm telling or not. So maybe I can get any feedback whether I should go further or not. Okay. Please note that some of you can be mute at this stage, at the time. So if you want to say something, make sure that you have your mic on, or you just type a message. Okay. So what I want to do right now is just I would like to go. I would just like to go more to talk about business due diligence, because this is the main aspects of what we are doing, the main and critical point of the decision of investment decision. So what we are just checking, and perhaps as you know, you have met, I guess you have met some investors, you have met some venture capitals or business angels, and this is kind of a common agreement, a common sense of us, that what we really check at the very first time is we check the team. Yeah, we need to check whether the team is really in the place, because this is a sentence that we always can use, that there is the truth, that the venture capital truth is that if you have it's better to have a great team and a decent business than a great business and a poor team, because it usually doesn't work anyway. So what we check about the team, we want to check the entrepreneurial aptitude, the motivations you have, because this is a crucial aspect. Whether you are really motivated to do the business, it's not only the cash motivation. It's really had to be driven by some values you have. We want to check the balance of the team, the organizations, and the leadership capability. So the question is whether your team is complete or just need anybody. At this stage, much I would like, as I prefer to have a full team already involved, but we really know that we fully okay if you know that you miss someone and you need to hire or just recruit someone, especially and sometimes in terms of marketing, financial stuff, or any other sales. We can support you with this, but you really need to know who we are missing at this stage. Team reliability and commitment, especially commitment. I want to share with my thought that we really put the money in your business. We put the money in a number of business, but we really are strong enough, that we really put it strong and straight enough that we want you to be involved only in one business, the business we invest. Yes, you have a shares in it. We are usually the major shareholder as a team, but we want to make sure that you are fully on board. You don't have to take care of anything else. just anything that will attract your conscious from the business. So this is really important for us in terms of the business stuff. You really need to be fully committed. We like to see, for example, expertise and the professional background that you have. Maybe you have some previous business experience. And I like very much to talk with the startups about maybe their failures. Yeah, because what I like about failing is if you have failed before, that you have learned your lesson. And luckily enough, you have learned the lessons not on our money, but on someone else's money. So the failures could be a really great opportunity to get a lot of knowledge and a lot of experience if you cope with them well. And it's still very important if you have failed and you have never give up and stand up and come to us again. It could be of a great value as well. And then also the question is about networks and partnerships that we together at the time we can find. So we are just discussing how can we be supportive to join with certain networks and partners that we have. Then the other aspect that I have, and I usually check, and I just like to ask you very much, is the business model. And I put the business model very strongly on the side, on a high level, just after the team. I know that you have discussions about business model canvas. So maybe I will not to do much go with this. Just to make it, what I'd like to find out is the sustainability of the business model. I mean, if the business is sustainable in the long term, this is not a seasonal business that I would like to do one time and go on. No, I would just to make sure that it's a business I can do a long time. It's a quality of the marketing plan I want to see. If you have any marketing plan, because it's important to see how it's done and how you're going to reach the customers, and then how you want to promote yourself. Then we talk about the product strategies, time to market, how long you need really to hit the market. Yeah, whether the market is your product is ready and you already have sales, or this is a prototype, or this is an idea. Because this is a very important risk factor for us just to mitigate and include in our evaluation. And of course, the scalability of the business. How we can scale the business in terms of different industries, different markets, regional, and how large the business can really be. And we just really need to know, just to have this in considerations, how we can grow the stuff. And then there's a next aspect is the market. Yes, I really need to check the market. What is your market? Yes, and this is the truth that I really have from my last 8 years of experience seeing perhaps 2,000 projects. Many times people come to us and say our market is a whole world. Yeah, we're just doing a global business, and our market is like 6 billion people in the world. And I say, great, but I want to see the customer segmentation and tell me how you are going to reach your first segment. Because reaching the first segment is the crucial aspect, as you really don't have enough money to address all 6 billion people in a commercial or any other way. So I want to make sure that at the stage you have a plan to get to you have a selected segments. You know whether it's a B2B, B2C, whether it's a kind of the different aspects, and then you can divide the business. You can do the segmentation in different aspects, not only about being small, large companies on different industries. But I would like to very frequently we just do the test and check what is the behavior of people making decisions in the business. Why should the customers buy it from you? And this is somehow we put a lot of effort to find out who is your final and target market at the inception of the company. Then is the market size. So how large is the market? But this comes very joined together with the next point, which is market trends, because we need to make sure that nevertheless the size, that the trends are positive. We can invest in a business that has a very small market at current stage, but the trends are that it will grow in the next 4 years by 20 times. And sometimes we have an opportunity to invest, and we resign from the very good business. It was a newspaper local, maybe not local, but those advertisements for the printed newspapers. And this was business at a good size, but at a shrinking market. So we just give up this idea. And then there's the demand and needs. This is very important for me. I want to see why the customers are going to buy the product. This is something I really, really need to understand what is the need they have. Because if you're producing the product for yourself, great. But if you're producing this for the customers, I really need to check whether there is a need on the market. Yes. So the next point would be the market accessibility. So how you're going to enter the market. Do you have any plan to enter the market? Is there any strategy that you can involve? If you have a next steps in terms of the market, in terms of the investments we need to do, is a really, really important aspect for me. And also prove somehow how your business is mature. If you have think it through well, it perhaps not much of a very important aspect to us. And finally, but not least, is the competitors. And with the competition, is like it's pretty similar, but just a contradictory to the market size and market target market. Because at the target market, as I remember, I said there was we have a whole world. In the competitor side, we usually hear there is no competitors at all. And believe me, if there is no competitors at all, there is a sign. For me, this is a red flag being taken and said, okay, something is wrong, because if there is no competitors, I see this as the three aspects that can be. That either the company is cheating us because they check the competitors and they don't tell us, or they cheat themselves because they haven't checked the market, but they believe by themselves that there is no competitors. And the third aspect is that there is no competitors at all, but perhaps there is no market at all in the case. And remember, if I think about the competitors, I do not mean that a company that produces exactly the same or have the same way of selling this. The competitor is somehow connected with the need that we fulfill. So we make sure that there is a need, and with this need, we must check who responds to the customer needs and in what way. So who we are really struggling with. And the best side and the best option is that in the outbreak of the 20th or 21st century, that traditional airlines carriers had a huge trouble. The sales just dropped, and they thought about this, that it was like a easy Ryanair or Wizz, just cheap flights companies that entered just took the market. But the truth was that there was different target market they had. They didn't attack the customers from the traditional airlines so much, but what they have done is just take the cheap airlines, low-cost airlines, take more market from the coach lines. So why still the business airport carriers lost the market share? Who are they competing with? And once they do the deep and thorough analysis of customer needs and the competitors itself, it was defined that they compete not with any transportation company, but as they fulfill the need to discuss, they have the opportunity to compete with Skype. Because the Skype gives us the opportunity to meet with us like we are meeting today. So I would just make sure that you find out and you think about your competitor very deeply, because you need to find out who really you are competing with. And sometimes it's not so obvious from the first blink at the side. And then we come to the product and technology. So again, and I'm just putting this a few times around and around, but what's very important for me is that you need to prove me what value for customers you put in. We call it a pill test after the Bill Payne who introduced the terms. So the question is really, what is your product like? Is this like a vitamin which means there's a great product, we can market this, and it's important to have. But in fact, and honestly, it's nice to it's product that it's nice to have, or is it a painkiller and it solves a significant trouble in our business? And we need to find out what is the real situation in our case to make it to make a proper market decision. Then we have a competitive advantage. So knowing our competitors, I just need to know what are our advantages, how we are better than the others, why we are performing better or maybe cheaper. And this is also important. If you are just competing with the other businesses that are already on the market, I don't want to. I mean, it's difficult to compete if you are fractional better. I mean, it's 5% cost reduction. It's not so important for the many businesses. You have to be, let's say, 10 times as good, or 10 times as fast, or 10 times as, or to half price the initial competitors. So you really need to be much better. And still, believe me, the competitive advantage, if it's only based upon price, it's not so strong in the long term. It's not so strong in the long term. Then we also talk about, usually we talk about MVP, but understood as the minimum viable product. You also have probably this, that we really want to see what is the basic product you have and how fast you can introduce to the market. We consider the different fields of application of the product. So where we can put the product, where we can use the product in different markets and different aspects. And we spend a lot of time, again, on the IP rights, whether the product can be patented, so whether it's patentable or it's not patentable, whether we should patent this or not, because this is not so obvious. I see more and more businesses right now coming to us and saying we are not going to patent our solutions. Not because we don't want to, it's because our strategy says that if we will patent this, we show our engineering staff or other aspects to the mass staff, and we don't want to do it because they will just make the reverse engineering and copy us with ease. And obviously, in an ICT sector, the IP rights are very difficult to patent in Europe. Yeah, they're really, really difficult stuff. And then, of course, which is important for us, the state of development, which I also meant before, is what is, in fact, I will just rephrase this as the how much time we need to hit the market and what obstacles we can find on this road. So is this risk that the product will not be delivered? Is that the risk that we will not able to move from the prototype to mass production? And how much time we need? And usually with terms of time, we have a tendency to multiply this by 2, because it usually takes much more than we thought. Then about financials, yes, as we are a venture capitals making a financing project, so what do you think about financials? So we want to see how much you need, what your capital needs, and how you're going to spend this. And what we usually say is we want to see, well, what tranches you can do. Because usually if you ask for any amount of money, you don't need this amount. You don't need this amount at the very beginning of the transaction. You can have this pile of money divided into four tranches, for example. But we want to know, what are we spending this money for? Is this the product development? Is this marketing? Is this the sales channel? Or our cost of employees? We really need to know what we are spending money for, because maybe we'll just find out the way to improve the efficiency of the money we have. Then important aspect is the financial projections. Yes, we want to do. Because this is also crucial for us, so we understand what they are just trying to do. Are they realistic? I don't think so. I don't see the forecast that fulfilled more than perhaps 40% in terms of startups. It's really difficult to do it, especially in terms of sales. in terms of the business revenue generation, but perhaps I want to see if the costs are counted well and they projected well. What I want also to talk about a lot of during this due deal of the on financials is the break-even point. So I really make a challenge to the startups and say, okay, so tell me how much product you need to sell to get them to the break-even point. Break-even, which I mean, you can at this level you are self-sustainable. So your revenues, your incomes are larger than your expenditures in the terms of the operations. And we just find out whether it's what time we can really achieve this break-even point, what time there is, and and whether this is really available or not. I also think about more my aspects as a ROI, return on investment, how much I can make on this, about cash flows, when I need to put the money, and finally, in the business due diligence, when we just slightly move from the only evaluation, but we also hit the terms of negotiations, we discuss about what is the pre-money valuation of the company and why this is this amount. And we're just trying to be very open, but there is a number of ways to make evaluation. That's, I would say, the art of valuation. But at the end of the stage, this is what I wanted to just highlight at the beginning and just come back. The valuation is the moment that you really need to be sure that both of the sides will be satisfied with the valuation. And this is honestly the moment that we also come, you are not selling the car or house or anything to your customers or the partners you never meet again. In terms, if we talk about the valuation, it's about how much we pay to become your partner. And after the day after we sign the deal, we are not on the two sides of the table, but we are just doing the deal together. We just becoming a kind of a pair in a marriage. So we really need to be understandable well. And this is, of course, some people would say that their venture would like to have more because they need to earn more. But we perfectly know that you need to be keep motivated. And if we take more than a certain level, we just go through the certain threshold, you will not be motivated and the business will collapse. So we will lose the money. So we just find out the optimal mix of everything. And still we need to think about something as called the next rounds, because I assume in many cases and many businesses that the first round or the round we invest in currently is not the final round, and we just need to dilute our shares, both you as well as our side. So we just need to consider this valuation to be fair and satisfactory for both sides. It had to be a win-win scenario. And then finally, this is the aspect that you perhaps think about as well, is the exit. Or maybe you don't think so much as we do, because we usually are concerned about the exit. The first thing we need to know is the exit horizon. Is it a 5 years? Is it a 3 years? Is it a 7 years? We just need to find out, yeah, and we need to be sure that we can this fits our strategy, and the company is really perhaps will be able to make the money much more than we invested in this time. But the value will grow significantly. This is what we believe. But at the exit also, what I would like to work with you on the due diligence side is just to find potential buyers who can buy your business within the next 5 years. And once we have the business, I want to ask why they will buy, or in fact, what I also buy, or questioning what they will buy from us. I was once involved in a business doing a kind of a chemical stuff on the high-tech level. There was just metathesis catalyst, which doesn't matter what it was, but basically it was used for the certain pharma, for pharma and polymers to reduce costs significantly by 50% of production of polymers, pharma to enable productions of certain medicaments, because without this there was a huge trouble to go through the clinical tests. And simply enough, the company, when we were just making evaluations, we asked ourselves together with the entrepreneur, who will buy the business? Yeah? And there was a major groups that we identified was our direct competitors, which they will buy because they want to have an IP and they want to have the market we have, which is fair enough for me. But they will pay a little bit margin on this. The other group we was discussing was the huge chemical companies that distribute a lot of stuff, a lot of different stuff. And well, when we're just thinking about why they will buy it from us, it was not thinking about they will buy it because they will increase significantly their sales. Not so much because our volume were not so significant compared to what they are moving on a large scale. But what we can propose to them, and knowing that they are stock exchange companies, we could propose to them a high margins, which improve their maybe not revenues, but improves other aspects of their financial statements. And finally, what we find out was that perhaps the most interesting for us was the pharma companies. Not only because they have a bunch of files of money available in the pockets, but because they would like to have the IP for their own. What I mean, they would like to buy our company, not because they will need make money on producing for themselves, but they will make money on this aspect that no other pharma will produce this medicament because they will not be able to overcome the problems they have. So this is particularly why should we, who will buy us, and why, what's the reason, and really what they are buying us for. And then what we are just sitting more on the venture side, we calculate the potential IRRs, internal rate of return, how much we can earn on the transaction. Does it fit to our expectation, whether we are really moving in a proper way or not? So this is aspects I really need to also know. If we are just moving slightly above the IRRs similar to the bank deposits, well, compared to the risk, which are much higher risk businesses, we don't like this. We really look for the healthy IRRs that will enable us to move like 5 to 10 times within the next 7 years. So this is particularly what we want to do. We really want to grow the business to the large side. Okay, so this sentence by Robert Wilbach, one of the US investors, proves why we really spend a lot of time on our due diligence, on our business due diligence. As you can see, hopefully the exits with investors who spend a lot of time on the due deals are by no way higher than those who make investments without the proper check. We really need to know what is in the business, and we're just checking this carefully just to ensure ourselves a potential of a better returns of a 7-like multiples, which is available at the market. So this is a really significant aspect that we can improve our multiples, but also something that is I use this due diligence time for is time of building trust and relations, because we really need to know each other. We will be doing business for the next 5 years together, and it's better to spend 2 months right now to get know each other, to know how we react, whether we fit to ourselves, whether we really want to do the business together. And this is why I'm just talking about doing business. And in fact, I would perhaps prefer to do businesses only once I will have the opportunity to sit with the entrepreneur, with you on the dinner and discuss in the glass of wine, not only about business, but stuff that are completely out of the business, because this is how important it is for us. Okay, so now I'm just also saying about due diligence, what is the due diligence and why we have the due diligence for. I would also like to say a few words about tips, the short tips I can tell you. So first, get yourself and prepare for due diligence. If you're just discussing with thinking about joining sending proposal to any venture or any angel investor, make sure that you are prepared for due diligence. Because if we are asking you to because what we also check is not only how you do the business, but also how smoothly respond to us. This aspect that we check. If you are sending a response for the business plan and you spend the next 4 weeks to prepare a business plan, meaning the business was not well thought on the side, and we need to do a lot of job. Think about what you can prepare for the legal stuff before. Whether you have some market research, you have some data proving that the business is really what you are talking about. The next issue is assigned contact person. Usually on the fund side, you will also have a one person responsible for the leading the business. So you'll have one person taking lead, taking charge from the venture side, and we also suggest that you have also one contact person, because there's a lot of work to do, and we will just send emails with aspects to do. You have to take control about doing the business, because also being well prepared for the due diligence is causes that you can run the company at the same time. Because as you have your businesses, you cannot stop the business for 2 months doing the due diligence. You need still to grow the business, to build the business constantly. So you also need to get your preparation before to enable to run two stuff parallelly, the due diligence and the business itself. And this is the last thing was just respond quickly to the questions we said. But there's one thing missing here about due diligence, and this is something that I would just like to highlight you, because this is aspect that I would prefer that most of entrepreneurs doesn't do, and I would say you should have done it at the side. This is the investor due diligence. You as a company should go to the investors and check. You should ask, for example, how much fund you have available. Currently in my fund, what I'm just managing, we have a 15 million euro available for the investments for the next 2 years. But we have also fund that is already closed. We've done full investment, so sending there any proposal make any sense for me. And ask also about time horizon, because funds usually have the structure. There is a structure that we say 10 years, we have 5 years for investments and 5 years of building, growing the company. So you ask what time frame we have a fund. In Meta in Poland, with Meta Zenica in Poland, we have a time frame of the next 7 years. So we have still 2 more years to invest and 5 more years then to bring the company larger. Try to contact a team on board. Yeah. Check with the portfolio investments. Ask people about us. Check what they think, whether we are supportive, whether we are how we react, what we are just doing, how we are doing the work on. Because this is very important, and we can tell you, of course, how we think how we would like to do it. But I would just say that once you just think about the contact person, you can even contact ourselves, and we should give you contacts to our partners and say how we cope with them, what are the relations. So it would be good to know about from the people side what is the investors like. And then there's investment strategy and approach. So whether you need or not this, our strategy assumes a hands-on. So we are just trying to be a supportive, meaning we also try doing a lot of efforts to build the companies. If you're looking for the passive investors who will give only money and will come back after 4 years, perhaps it's not us. But you also need to figure out what you really need and fix and fit it to your strategy. And then also look at the portfolio investments, what we are strong in, whether we are more ICT, IoT, medtech. Maybe we are a sector agnostic. Maybe we have some companies in the portfolio that could be give a hint about what we are doing. And obviously, consider this: if we have a business in our portfolio that's doing quite well, but you have a business that could support our business, well, it would be much better discussion that you said, okay, so you have a company X in the portfolio, and we know how to increase the revenues of the X company within the next 10 months 3 times. Well, I would say let's talk about this because this is somehow you really, well, you know the business and you've done your homework well. So this is basically what I would say would be my expectations. Okay, so I would like to, as I haven't seen any questions, seen or heard any questions so far, and we are moving towards the end of the our webinar. So I just like to open the floor and let you ask the questions if you have any at the time.
Yes, please ask some questions. If you want to take advantage of this webinar.
Okay, it's moved too fast. Okay, I'm still here.
You can write also on the table chat on the left of your side.
And just I would like to remind you that some of you can be new, so just make sure that you unmute the mic before you just start asking the questions.
I see that Andrea is writing something, yes. So we will wait from Andreas.
Sure. Of the inner working. Okay. So Andrea is just asking about the internal process, how we work. Well, this is this is not a secret sauce, but usually if we just discussing the company, we start from the pretty intensive meeting. So we just sit for a few hours together, discuss about strategy, discuss about working on, and this is something we do together. Then on our side, we usually go for the deep dive on the desk research. We ask our analytics to go through and check the market size, to find out the competitors, to find out what's going on the market, just to find out what's the situation. So we're just trying to do this. We also usually work on the feedback stuff. So if you have any questions or we have any questions, we hit you and ask, okay, so we find at a certain time that there is a competitor X doing something like this in this country. Or why you don't expect these to come? How you expect this to be you influence our business. So we're just trying to do this. But then if you think about more formal aspects of this, the business due diligence is done by the management team. Management team, of course, is a few partners, directors, and managers and analytics. Of course, everybody doing different aspects of the work itself. But at the end of the tile, because what I usually think about doing the business due diligence is there's a little bit more than a simple due diligence, because a due diligence would say, okay, let's see what the situation is. In the due diligence is not only let's see what the situation is, but we also sometimes create a new reality. So we just improve the strategy, we just make some amendments to the product, we just think about more how to improve it. And that's why it lasts a lot of time from perspective of both sides. In the meantime, we also start to discussing the term sheet negotiations once we are just pretty engaged in the process. So we just want to make sure that we sign the term sheet. So we just discuss about the different aspects of the legal stuff that should be put on, what legals we put. We just try to understand the tag, drugs, liquidation preferences, that all we certain aspects of the standard venture capital clauses that are not maybe some common for the entrepreneur. And then we just discuss this together. Of course, we suggest that you also contact your attorneys or legal support just to make sure that you also feel comfortable. And having signed the term sheet, we just move into the, as I mentioned, to the legal due diligence, which is like the final aspect. Okay, so if we say yes, we agreed about terms and the conditions, and we say yes, so let's check, let the legal staff check a lot of aspects. Well, as I meant, including whether the company was, or sometimes the questions that could be said, well, it's so simple and so obvious. Usually not. There's question about shareholders. Who is a real shareholder? Is there a hidden shareholders, or maybe someone we missed? If we have done all formal aspects properly so far or not. So this is a lot of work also they spend on, and then we have to do it. And if we got because the effect of the legal due diligence is usually our attorney delivers the due diligence report, and we decide if there is no significant aspects on it, no significant red flags. We say, okay, we agree with this, and we go with the business, with the due diligence and term sheet to our investment committee, who is our partners in the fund. Usually they're part of management teams. There is also LPs, meaning the investors, because as the fund we also collected money, we also have money from, we are just kind of a pile of money, but we got it from the outside investors. So we invite these investors to say if they like the business, if they like the conditions, and they can agree on this. And then we draw, or we sit, if there's agreed that we have an agreement on this, we sit down, and our attorney comes back. I'm just trying to work on the final agreement, including all of the aspects that should be done with from the term sheets, but also there's a little bit more elaborate stuff to do in terms of the investment process. So there's much more details in the investment agreement. We also do usually change the internal documents of the company, so we just want to make sure that they are they are to our expectations and the negotiations we have. So that's the more aspects inside. So in our fund we have right now directly involved 5 people in the investment stage. Of course, there's kind of the people that are more involved on the operational stuff of running the fund well, but of investment we have 5 people, 2 are investors, to our more senior with doing management, and the director, and 1 partner doing the business right now. So this is particularly staff, and we usually, for example, have one of our either director or manager is leading the business negotiations, the business contact, analytics works for us, doing the stuff we really ask them for to, but they also, that kind of analytics, they know what to do, how to check. And with the partner, we just negotiate with the partner about the terms, and the conditions we want to agree before we go to the investment committee to meet the other partners and the member of the investment committee. And does it answer your questions? Okay. So, folks, if you have any other questions? So let's as we are really moving towards the end, I'd like to thank you for the participation in this webinar. I really hope that you draw some message and information from this. But if you need any more details, if you want to ask any more questions, so please contact me. This is my contact details. You can mail me, or you have my Skype as well, so you can reach me anytime, and we will just be. I'd be glad to support you and let you know a few words about business proposal or any questions you have. Okay?
Okay, so I would like also to add that we're gonna have next webinar with Simon on the 2nd of June, and the subject of this webinar will be all about the investment process, yes, and I think this session will be a little bit more about the investment process, and Simon will give and tell you how it really works, yes.
Mm-hmm.
So, yes, thank you everybody for your time and for your attention, and hear you soon on the next webinar. Thank
Okay.
you, Simon.
Thank you very much, guys. Bye.
Bye.